Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, July 13th, 2023. I'm kind of flabbergasted over the just the amount of bullishness that's out there right now. And like I said, I mean, this isn't anything about the market just going up. It's just a matter of the reasoning on it, meaning that they're cheering that we have inflation that has come down, but that's like off at the CPI. The regular numbers that we're doing, they're still stuck at like 6% right now, and it's really the consumers that are getting crushed, and they've been getting crushed for the past 2 years. But the thing is that they're jumping in. Like, I mean, if I was just coming up to my desk and I haven't seen anything since let's say 2019. Yeah, I would think the Fed just did another round of QE the way that this buying is going on right now, and it's almost that's what they're anticipating on it. But it doesn't make a whole lot of sense to me. But a lot of times this is what the market has to do. They lower everybody in or out, and then they make the turns. And we saw that here when you have all the bulls that are cheering that the Bears missed out. First of all, we traded both ways. We just got short a little bit. We got short. We took profits of 180 points, but then got in way too early. I didn't realize this was going to happen. But in any case, but you have the people on TV like the Perma Bears, and the bulls are. I mean, the Bears are missing out on everything. And the thing is, though, is that they've really been long probably from here when they were calling that the low was in already. And then from here they this is the panic selling. I didn't see them coming out on TV and mocking the Bears then as we saw a 23% decline. But here they're oh, you're missing out if you didn't buy here. And that's what lures people, the retail public, in is this kind of this kind of garbage that they spew out, that oh, this is what they missed already. But they said that when we were here that you missed the big move, and they did. And anybody that bought up here and listened saw a massive loss and probably panicked right here when we had this series of 0% bullish sentiment readings. Now we're getting them into 90s right now. So it's everybody has switched from complete bullishness to complete bearish to complete bullish. And if you notice, this is my stock charts chart. I mean, this is the channel that I've had in place. This is I had 412 because it's kind of hard to figure out where the top is going to be because it's uptrending. The high was 45.17. But in any case, it's the top of the channel. And if this is going to play out on this, we're probably looking at the next move coming somewhere down into the 40.80 level. So let's take a look at another, and this is that time and price chart. So the red boxes are, let's just say, the time going from when we made this high here to we made this low here. So now what it is, it's in theory, these don't always work out exactly right, but it usually matches the same amount of time. So if you look, that time period it's coming in right now. It would be next week is when the top would be hitting in if it was going to follow it exactly. Now it doesn't always have to. But the other thing that's pretty cool is, well, not cool, but here's this was a long wick down. I can't move this right at this particular point, but this is the low on it. So this is the low to this high. And now if you just take that same distance and move it here, this is where I came up with that. What was the final number on it? Right here, 45.13. So we made it to 45.17. Now remember, I put this out last week. So we were actually in this area here, and it came up to it. But that's just using the price and time sequence that I've been talking about. All right, so just taking a look at our daily charts here, and it's something I just been again. It's been in play. I didn't think we were going to get up here this many times on it, but in any case, this is that bearish wedge. It's still in play. You can see that this is going to be the first line of support. Sorry if that just kind of cut out. My computer's freezing up on me. I think I have too many things open. But in any case, this is the first really line of support. It's actually really strong support, and that's going at 43.04 because we have price support right here. We have the 50-day moving average. But going, I mean, maybe it's going to be the first time, but we know when to be expecting the low. So I don't think this is going to be enough for just the pullback on it. And I'm eyeing more down near the 41.30. And if this pattern is going to play out, then, we're looking at a move all the way down to the 41.21 or possibly down to the 38.25. So these are pattern targets that are in place. But the first line of support is really going to be coming right around that 43.10 level, and then we come down, and this is really the good support down at the 41.20. You can see we have bearish divergences on the daily charts. If we look at the 60-minute charts, we have some bearish divergences there. Not much, though. It really kind of fixed itself from what was there, but it was just a little one, so nothing crazy. But and you can see here, this is what the first line the bears need are going to have to get through, 44.50. They get through that. Then we're looking at, we have this support right here at 4,400. And then we're looking down at really the last line of support before we start seeing drops hit pretty hard. And that is down at the 43.24. Now, something to keep in mind here is, I mean, just looking at wave structure here, is we have a 1, 2, here's our 3, 4, and 5. And the reason why I'm labeling it like that is because it's very easy to see on the daily chart here, where you have your 1, 2, 3, 4, and this is 5, and we have these bearish divergences. And as you know, I warn people not to be, jumping on the trend train when we're in wave fives, and that's either up or down, because you're going to get crushed no matter what. I don't care what anybody says on this one. Wave fives, I mean, everybody seems to get extremely bullish or bearish. They're bullish at the tops, and they're very extremely bearish at the bottoms, expecting it to go down more. And when that 5 ends, we then see a retracement that will, most likely cover. It really, if we're just going to look at what an actual price target would be just on retracement levels, that would be somewhere all the way down. Come on, hang on one second. Okay. So if that's, let's just say the tops right here, just on a minimum basis, we'd be looking at a move coming down to the 41.40 level, more likely down to the 40.50, with an outside chance coming down to the 39.26. And that's just the Elliott wave count from a retracement level after you see 5 waves. So I'm not saying that those are definitely going to be coming into play, but just going by the Elliott wave theory, that's what that is. So it's really, we really need to see the bears start, stepping in. They really haven't had a chance because we've just been gapping up, and there's been this panic buying of fear of missing out. And again, when it was doing it back in from 2009 until 2019, it was hard to believe the type of move that we had. But you take a step back and you look at what the Fed was doing, and kept zero interest rates for almost what was it, 10, 12 years. So that's not there. And seeing this panic buying at this particular point, like I said, it's not really making a whole lot of sense to me, but the market really doesn't have to make any sense. So let's see what plays out tomorrow. Just remember that we have sell signals on a lot of charts right now. This has been nothing but panic buying. I think that the shorts are pretty much out of the equation. And with that, let's see what plays out tomorrow, and have a great night.